Hello and welcome everyone. My name is Josh Rincon. I am the program director here at Avance Latino, and I'm super excited that you're joining us today for our workshop on how to buy a car. We're going to be having some guest experts of this field talking about how to buy a car. So this is going to be a very interesting topic. If you have any questions, whatever question it may be throughout the workshop, let us know in the comments below. We'll be answering. Before we start the presentation, please share this workshop. That way it's not just you that are benefiting from this, but your friends, your family, your community. That way you're all empowered, because knowledge is power. So without further ado, we're going to be having our guest speakers over at CIT One West Bank start this presentation on how to buy a car. Enjoy the presentation.
For today's webinar, we've selected a wonderful group of One West Bank branch managers and bankers who will be walking you through what you need to know and consider before looking for a car and or buying one. It is my pleasure to introduce to you in the order of their presentation, Melinda Fernando, branch manager of Tarzana branch, Susanna Dermenjian, universal banker at Northridge, Vida Zaribov, branch manager of Encino branch, Azadeh Adhami, premier banker at Beverly Hills, and we also have Carl Schnoraboryan, branch manager of the Burbank branch, who will be assisting us with this slide. As you can see on the next slide, the goal of this workshop is for us to learn the following. We're going to learn the list of all of the costs of owning a car besides just the monthly payment. We're going to be distinguishing between the listed price and the actual price of a vehicle. We're going to calculate how much of a car can we actually afford. We're going to be discussing the different payment options and how to decide which option is really right for us. We will demonstrate how to evaluate a loan and ultimately learn how to shop around for a car and then how to negotiate a contract. On the next slide, we are going to be talking about the true cost of owning a vehicle. The process of buying a car can be very confusing for most people. You may have experienced it yourself at some point. Most of the time, this confusion can result in miscalculating the true cost of owning a car. One thing that was really an eye-opener for me was when I learned that over 7 million Americans are more than 90 days behind on their car payments. Think about that for a second. 7 million Americans are more than 90 days behind on their car payments. My guess is that some of them are in this situation because of this exact fact that they were not fully aware of the car buying process and were not able to be correctly calculating the true cost of owning a car. The reality is that there is a lot more that goes into the price of a car than just the listed price. In fact, the final purchase price of a car could be as much as 10% more than the listed price when all the fees, taxes, and payment arrangements are calculated. Here, as you can see, some of the other costs of owning a car is listed. For example, annual percentage rate, or APR for short. If you buy a car using a loan or a dealer financing, you will likely be charged an APR, which is the cost you pay each year to borrow money, including fees. Then there are dealer fees. If you buy a car from a dealer, you may also be charged fees related to preparing your vehicle for sale, such as transporting the car to your location or document fees. Other fees are titles and registration fees. When you purchase a car, in order to operate it legally, it will need to be titled and registered, and there are fees related to that. Sales taxes. Now, this will depend on where you live. You may be charged a sales tax at the time of the purchase. Although sales tax may seem minor or less costly on a lower priced item, it can really add up on a big ticketed item like a car. And what about the add-ons? New cars are usually advertised at stock price, which is the price of a car without any additional features. But you will have options of adding additional features to your car, such as motorized windows, sunroof, leather seating, security enhancements, or other non-essential items. If you choose to add on any features such as these, there will be significant costs added to the advertised price. In addition, you should also consider the cost of operating your car, like insurance, gasoline, maintenance costs. Also, depreciation should be taken into consideration. So you can see that owning a car can certainly be a very expensive purchase. A great way to make sure you get what you need when you buy a car is to really become more knowledgeable about the car buying process, because it's going to help you get the best deal and may save you from being overwhelmed or surprised when you start shopping for a car. And this is what we are going to work on today. Part of being informed means really understanding your own needs and budget before you start shopping around. At this point, I will turn the presentation over to my colleague, Melinda Fernando, who will continue our discussion. Melinda?
Thank you, Puran, for the introduction. My name is Melinda Fernando. I'm the branch manager at Tarzana branch. First, it's important to understand the difference between what you need in a vehicle, you must have, versus what you want in a vehicle, or what's nice to have. Must-haves are features that you cannot do without. As a responsible buyer, these must-haves should be determined by you and your individual needs. For example, if you travel a lot, fuel efficiency or good gas mileage may be a must-have. If you have children, you must-have may include safety features. A must-have could also relate to the vehicle reviews. Maybe you will only consider cars that have a good reviews for quality. Nice to have, on the other hand, may include features like car maker, model, color, add-ons, and special features like Bluetooth, GPS, and backup cameras. As you see on the screen, must-have versus nice to have. Again, it's gas mileage, fuel efficiency, safety features, age, and the reviews. Now that you have a clear understanding of what you should focus on when shopping for a new car, let's talk about the actual cost of buying and owning a car. This information will help you to create your own car budget. First thing we will look at is just the listed price of the car. Here's what happened to many people. You see a car being advertised for a certain price and you think it sounds like a great deal. Car dealers may advertise, for example, discount of the MSRP or rebate on the purchase price, as you see on the screen, which is listed prices versus actual price. You might think, wow, that is such a great deal. I should go talk to a salesperson today. This is a great advertising technique because it gets people to meet with the salesperson. But it may not tell the full story. You see, the advertiser's price is not what the vehicle will cost you at end of the sale. There are many additional charges. Sometimes we call that fine print. First, there's a base price. This is how much the car costs at the dealership without any add-ons or options. It's a very basic model of the car. Then you may be charged for any add-ons. Add-ons are extra like daytime running lights, four-wheel drive, GPS system. You may also be charged if you decide to purchase an extended warranty. When you purchase a new or used car, the following fees may also be included: dealer fees, sales taxes, registration fees, DMV fees, title fees, administration fees, filing fees, documentation fees. These are all extra fees that the dealer and the manufacturer may charge to cover their own costs. So while you think you are buying a car for $18,999 because that was the advertised price that got your attention, the car may be wind up costing over 20 grand once all the additional charges and the fees are added. If you don't pay cash for the the car up front, you might need to get a financing from a dealer or the loan from a financial institution. Each month, you will pay the financial institution. Also, what is important to understand now is that you also need to consider the cost of getting a loan or financing a car when you determine how much you can afford. Let's go to the cost of owning a car, as you see on the screen. Some of the costs that go into owning a car are obvious, right? You need a gas, electricity to operate your car. Every year, you need to renew your car registrations as well. What you see on the screen is the cost of owning a car, as I said before. So let's talk about that. The cost to consider: the gas, registration, maintenance fee, depreciation, and auto insurance. Let's put all together now. Let's go to the slide, putting it all together. Now that we have reviewed average cost of owning a car, let's add them all up together. How much does it cost per month? Let's say your loan payment is $500, and the maintenance and fuel will cost you about $225, and insurance is $100. So total adds up to $825. That's basically how much your budget for monthly, how much you can afford to own a car monthly. Now that you know the potential cost of owning a vehicle, let's work on your own budget so that you will be fully prepared when you start to shop around. For instance, if you know you can spend about $800 per month on all expenses related to your car, and your current car insurance payment could be $100, while maintenance and fuel will cost about $225, you can assume that you'll be able to spend about $475 in your monthly car payment. Of course, your car insurance and other expenses may change, especially if you get a car that is very different from your current car. But you can use these figures to give you a basic idea, as you see on the screen. Your budget should be $475. Your car payment should be $475 based on your budget, monthly budget. So now I'm going to introduce Susanna, banker from the Northeast branch, to explain the payment options. Susanna?
Thank you so much, Melinda. I would like to go over a few of the payment options when buying or leasing a car. So a few of the options are direct lending, dealer financing, or leasing. Direct lending is when you get a loan from a financial institution, such as a bank or a credit union. This way, you get pre-approved for a loan amount before you start shopping for a car. It'll give you an idea of what to look for depending on the amount of the loan. This can benefit you to find the best deal. Dealer financing is, first you have to find a car you like. You apply for financing specifically for that car through the dealer. The dealer and the buyer then enter into a contract. Contract will include payment toward the purchase and agreement to pay amount financed, plus finance charges. Dealer financing is convenient for the buyer since everything takes place at the same time you buy a car. Also, you have the option to negotiate financing terms and the price of the car. The only downside to dealer financing is you can't shop around. Then we have leasing. So leasing is like basically renting one. You don't own the car, so you can't sell it to another person. Also, there are rules when you lease a car. For example, there are a certain number of miles that you can't go past. If you go past the number of miles given to you, you will have to pay penalty at the end of your lease. Leasing is a good option for people who like to have a new car every couple of years, and the monthly payments may be less expensive. You now know how much you can afford in a vehicle and the different payment options. Most people will need some sort of financing or lending when purchasing a car. The less you need to borrow, the lower your monthly payment will be. There are two ways to reduce the payment you need to borrow. One, you make a down payment. Two, you can trade in another vehicle, or you actually have the option to do both. A down payment is cash you pay up front toward the overall cost of the car. The more cash you pay, that will reflect the monthly payment. Some lenders require that you pay a percentage of the sale price up front. Required payments are as low as 9%. A trade-in is when you offer your old car as part of your down payment. You can research the ACV, actual cost of vehicle online. If you still owe money towards your old car, you still have the option to trade it in, but of course it's best that you owe less on the vehicle than it's worth. The dealer may factor it into financing agreement, which then will increase your loan amount. Do not rely on the salesperson at the dealer to do the research for you. They will most likely give you the lowest trade-in value. Understanding your credit worthiness is important when lenders are determining how likely you are to pay back a loan. Lenders look at your credit score when deciding whether to offer you a loan. And this can also reflect the interest that will be charged. If you have a good credit score, that will give you room to negotiate on a lower interest rate. You are legally entitled to receive a free credit report from each of the 3 credit bureaus every year. If you find an error on the credit report, it is important to address them first thing. Credit score is not listed on your credit report. You can find that information by visiting each of the credit bureau's websites. And some financial institutions do provide this service. It would be best to reach out to one of them. Knowing your credit score will be helpful in negotiating on better financing terms. In this next slide, I will go over how lenders may use the information on your credit report to help calculate your debt to income ratio, DTI. Your DTI ratio provides information to the lenders on how much debt you have and how much you're able to take on. To be able to figure out your DTI, you add up how much you pay per month for your current debts, such as mortgages, student loans, credit card debt. Divide that number by your gross monthly income. Your income before taxes are taken out. The lower your DTI ratio, the chances of you being able to take on more debt is likely. Most lenders can be flexible, although they are typically looking for a DTI ratio under 43%. I will now have Vita Zaraboff, branch manager in Encino, spend some time discussing auto loans. Thank you.
Hi. In this session, I'm going to go over interest rate, APR, and the term of the loan when you are shopping for a car. What is interest? Interest is a fee or an amount that is charged by the lender for borrowing money. APR, in another word, annual percentage rate, is the interest plus any other fees that the lender is going to be charging annually for the loan. And this is very useful to compare APR to interest rate when you're shopping for a car. Auto loan interest is amortized. That means when you make your payment, part of your payment goes towards the principal, which is the amount that you borrowed, and part of the payment goes towards the interest. Now, at the beginning of your term, when you make your payment, a big amount of your payment goes towards the interest, and this would change towards the end of the term, and then the most amount goes towards your principal. In this slide, we're going to calculate interest. Thomas is borrowing $25,000 with the rate of 6% for 4 years. Now, when he puts these figures into the calculator, he realizes that his total payment is $28,182, which is $3,182 over what he borrowed. This amount is paid to the lender for giving him the loan. Thomas is kind of disappointed, but already it's too late. He signed a contract. Now we are comparing interest rate. Now, Thomas has a good credit, and he's able to get his loan at 6% rate. His friend, Sari, has a better credit score, but the dealership is offering her the same loan. So she has started negotiating, and she's able to bring her rate and annual rate to 4%. So this is how she gets a better rate, and this example shows how important it is that the interest rate and APR are when you're shopping for the loan, so you can actually negotiate your rate. Another important factor that we have to pay attention to when you're shopping for a car is the term of the loan. The term of a loan or the length of the loan has a big impact on how much you end up paying for a loan. In this next slide, we're going to compare loan terms and interest rate. Now, loan A is for $20,000 with a rate of 4% and a term of 6 years. Loan B is for the same amount with the rate of 6% with a shorter term of 4 years. Now, we're going to discuss what loan is cost less to a borrower. Is it loan A? Is it loan B? Or there is no difference? Now, next slide is going to show you the difference. If you look at loan A and loan B, and if you come up with the answer, no significant difference, you're absolutely right. Loan A has a lower APR, but longer term, which means extra 2 years of interest, and that's going to cost more for loan A. Now, many people agree to lengthier loan because it's going to give them less payment, lower payment. But this is not the truth in the long run. In fact, if you cannot afford monthly payment on a loan with a term less or equal to 5 years, then maybe that car is not in your budget. Another tip that many experts are encouraging people to follow is called 24-10 rule. Okay, the 24-10 rule is a convenient way to help to see if you can actually afford a car payment. Number one, you should make a down payment of 20%. Number two rule, you should plan to finance a car for not for more than 4 years. Rule 3, your total monthly car payment, which is interest and principal, plus your car insurance, should not equal more than 10% of your gross monthly income. With that, I'm going to turn this to my colleague, Azadeh, to continue. Thank you.
Thank you so much, Vida. Hi, everyone. I'll be showing you the next slide, which shows applying the 24-10 rule. Here's an example. Let's say I can put $500 cash towards a down payment for a new car, and my old car has a trading value of $2,500. That's a total of $3,000 in down payment. If we divide $3,000 by 20%, we get $15,000. That's how much I can afford based on the down payment rule. But let's say my dream car costs much more than that. It's listed at $32,000. In order for me to afford this car, I would need to put down $6,400. That means I will need to save about $4,000 more or settle for a car that isn't exactly my dream car. Now I can do a little bit more research to see if my dream car is even in my budget by calculating what I can afford in monthly payments. If my gross monthly income is $5,000, then I shouldn't spend more than $500 on my monthly car payments. And let's not forget that the average monthly insurance cost is about $100. This means that if I pay the average for car insurance, my car payment should not be more than $400 a month. Now let's move on to the next slide to learn about some tips and tricks on what to do when you're actually ready to buy a car. 1, research your options. When you're trying to decide on a car's make and model, look at published car reviews from reputable companies. Consumer Reports is a well-respected resource for car reviews. 2, shop around. When you start shopping for a car, look at both local and online dealers. Finding the right car will take some digging, especially if you're looking for a used car that has all your must-haves and the price is right.
And it's important to know when you're shopping around for financing options, the lenders will likely be running your credit report, which is known as an inquiry. Inquiries are recorded on your credit report, and too many inquiries may affect your credit score. However, depending on who's watching, multiple inquiries within a short time frame, usually between 14 to 45 days, are generally seen as shopping around and count as one inquiry on your credit report. Just make sure that your shopping around doesn't take more than a month and a half. 3, don't forget to negotiate. All of this shopping around and research will help you negotiate the best deal. There are 2 different places where negotiating will serve you best. Negotiate the total cost of the car with the dealer. Use the information you gathered in your research to offer a price that's below the actual car value, but only accept what you know is a fair price. Negotiate your loan terms. This can include interest rates, APR, and term length. Now let's move to the next slide where we will be examining the contract. It would be a shame to go through all the work of shopping around and negotiating the best deals only to have the contract state something different than what you expected. Fortunately, the Truth in Lending Act protects consumers by requiring the lenders clearly state the important terms of the loan in the contract. This includes a clearly stated APR, how the finance charge is calculated, the dollar amount of the finance charge, the amount to be financed, the total amount to be paid broken down by principal, finance charges or fees, and down payment. And lastly, the number of total payments with amounts and due dates listed. Before signing the contract, make sure to read over all the terms of the loan. If anything differs from what you expected, do not sign the contract. Have the lender or salesperson rework the contract until it reflects the terms you verbally agreed to. Now, let's talk about a scenario when signing a contract isn't even an option. What if you go through all the work of doing the research, shopping around, and negotiating, and you still can't find a car that fits your budget? Or what if you're unable to get a loan? Good news is that there are some options that you can take. You can either save for a larger down payment, consider a less expensive car with fewer add-ons, purchase a used car versus a new car, or wait until you can improve your credit score. Another option would be to find a cosigner for your loan. A cosigner is someone else who's listed on the loan with you. If you have a low credit score, a cosigner with good credit can help you get a loan and may even help you lower your interest rate on your car. It's important to realize that a cosigner assumes equal responsibility for the loan. So if you're unable to pay the loan back, or if you miss a payment, your cosigner's credit will be affected. And it's definitely a risk that you would like to make sure your cosigner is willing to take. After signing a contract, you need to be sure to pay your loan back. And let's close this course by discussing some important information about your car payments. Now we're moving to the next slide where we talk about your car payments. First, be careful about paying your loan off early. It's good to pay down your debts, but you need to be smart about it. Remember, the longer the life of your loan, the more money a lender will make in a deal. So it's in their best interest to keep you in the loan as long as possible. For this reason, many lenders add a prepayment penalty to their contract. Check your contract to make sure there's no prepayment penalty fees. Also, if you want to pay more toward your loan than your amortized pre-calculated monthly amount, make sure that that extra payment is applied to the principal, not to the interest, as lowering your principal will reduce the amount used to calculate your interest going forward. And most importantly, pay your bills on time. Late payments can be noted on your credit report and may affect your credit score. Seriously late payments could lead your lender to sell your loan to a collection agency, which will further impact your credit. Late payments could also lead your car to be repossessed. Lastly, a car, especially a new car, is a very expensive purchase, and an auto loan is a legally binding agreement that shouldn't be entered into without a consideration. Thank you so much for listening. Now I'm going to return it back to Puran for conclusion.
Thank you so much, Azadeh. It's time for us to look at the summary of what we have learned during this presentation. One, we learned that a car will cost us more than the advertised price of a vehicle. So we definitely need to be sure to know what all the extra fees are before signing that contract. Two, we learned that our ability to get a loan and the loan terms are heavily influenced by our creditworthiness. We also learned that car payment options include direct lending and dealership financing and leasing. And four, we learned that when comparing loan and financing options, it's super important to look at interest rates or APR and the length of the loan to decide which options work best for us. So now I'd like to go over the top 3 frequently asked questions around this topic. One of the first questions that we get asked is that it's about credit scores, actually, and what is a good credit score range to be able to buy a car? Usually, for the most part, a credit scores of 630 to 689 is considered a fair score. Scores of 690 to 719 is considered a good credit score. Anything below 630 is considered bad, and the scores higher than 719 is considered excellent. Now, credit score requirements may vary depending on the dealership, but remember, in general, the higher the credit score, the better rate will be offered on the loan that you're applying. The second most common questions that's out there is that, is it better to buy a new car or is it better to buy a used one? So if you remember earlier during this presentation, we covered what we considered wants versus needs. The wants versus needs is always a great guide for us in purchasing almost anything. However, reviewing some pros and cons of purchasing a new car versus a used car can also help with the decision-making process. So here I'm going to review a few pros and cons of both purchasing a new car versus the used car. So for the new car, the benefits of purchasing them is usually they have lower interest rates that's being offered by dealers when you buy a brand new car. There are manufacturer warranties usually offered with the new cars, and usually new cars come with the latest technology, such as navigation system, internet access, etc. A few negative or cons in purchasing a new car would be a depreciation. On an average, a new car loses about 11% of its value as soon as it's driven off the dealer's lot. So depreciation that we also covered during our presentation, it's an important factor to consider when you want to buy a brand new car. And also another big expense is insurance. Insurance is usually much higher and more expensive on a new car. Now, a few pros and cons of purchasing a used car. The benefits of a used car would be it's lower cost to buy a used car. And if you have to finance it, the loan amount is usually lower, so you can pay off your loan faster. A few disadvantages or cons of purchasing a used car would include reliability of a car might be an issue. Also, if it's privately purchased a car from a private party, usually financing is not an option. Used car financing are usually have a higher rate, and there are usually no warranties. And when purchasing a used car, Your options as far as the features and or color of the car are limited. So there are advantages and disadvantages to both options, which needs to be considered very carefully before you make your decision. And finally, the third frequently asked question is, when do I need a cosigner to buy a car? And generally, based on the financial institution's underwriting guidelines where you are trying to finance your car, if your credit score or your income is not strong enough to be able to qualify for a loan on your own, then they may require you to have a cosigner. However, if you have a strong credit score, which is typically about, like, let's say 650 and above, along with sufficient income to cover the loan payments, it's likely that you will not need a cosigner. We have come to the end of our presentation. I would like to thank all of my colleagues, Melinda, Susanna, Vida, Azadeh, and Caro, for their time and contributions. We really hope that you've enjoyed our Buying a Car webinar presentation and found the information that we provided here of value to you. Thank you very much.
Wow, what a great presentation. I definitely learned a lot. I'm actually in the market of buying a car. I sold my car a couple months ago, and you know, this market's just been pretty crazy right now. But with this knowledge, I'm definitely going to apply it to my car search. I'm being very patient. I'm going to apply all of that. That way I make sure not only I get the car that I want, but I get the best deal possible. I gotta save that money, just like it says right there in the hashtag, save that money, or in Spanish, save that dinero. Because we want to help you guys, want to empower you guys. And you know what? This is not just for you guys. I'm learning stuff too. This is great knowledge. And again, I just want to give a huge shout out and thank you to everyone, the team over at CIT One West Bank. They did a great job. They broke it down for us perfectly. And if you really enjoyed this workshop, not only share it with your friends and family, but like our page, follow us. And if you don't use Facebook as much, maybe you like to use YouTube more, you can find us on YouTube. All our links are down below. Our YouTube is Avance Latino. If you want to find us on TikTok, it's also Avance Latino. Instagram, Avance Latino. Twitter, the same thing. You can find us wherever, and we're active on all of those platforms, and also on LinkedIn. You can find us on Avance Latino as well. Without further ado, thank you guys so much. My name is Josh Rincon, Program Director here at Avance Latino, and I hope you guys have a great day, and I'll see you guys in the next workshop.